today.
You said on the earnings call, I mentioned it in the tease, that Twilio is essentially a company that was built for this sort of environment. Tell us what you mean by that in terms of the level of increase of interest you've seen in your business.
Well, Twilio is a cloud communications platform that's used by software developers and companies to build communications into the products that we all use every day. And as COVID has emerged, what's become clear is that Twilio has three things that really many organizations need. We have digital engagement communications technology. We have agility of software, the ability to build quickly and reinvent on the fly as needed. And we have cloud scale, because this hasn't been a time where people could do capacity planning and racking up servers. They need to build something, they need to turn it on, and they need it to work. And so Twilio has provided those three things to a wide variety of companies, to nonprofits, even to governments through this period of time, as we always have throughout the course of Twilio.
I mean, Jeff, you've got 57% revenue growth last quarter. I don't think any other company has seen that kind of growth. Which industries and which type of companies drove it?
Well, we see a broad base of customers. You know, Twilio has a highly diversified customer base. We have over 190,000 active customers on our platform, and they represent everything that you can imagine. So we've seen, obviously, strength in certain categories. For example, as commerce has turned from physical in-person commerce into curbside pickup or delivery, there's been a lot of workflows that need to be invented. As food has turned from sitting down in a restaurant to something that's being delivered to your door. Food delivery has been an area of growth for us. We've seen new strength in telemedicine and telehealth. In fact, it was a fortuitous coincidence, if you will, but we announced support for HIPAA and healthcare workloads in the end of February, and it turned out that that launch was just in time for the onslaught of new telehealth initiatives that many software companies and hospitals and medical providers were putting in place to address COVID. And so across the board, we've seen a number of use cases that have grown in relevance because of the need for social distancing, for allowing people to stay at home. And one of the biggest areas that we've seen also is in the contact center. We have a product called Flex, which is a cloud-based contact center. And as contact center agents have had to work from home instead of going into the office, Flex has enabled organizations to be able to keep those workers safe and enable them to continue serving their customers during this critical time.
Jeff, if you had an existing partnership with a company and they've seen a massive increase in the usage of their services, do you get to share in that pickup, or is it a flat rate and you just have to deliver the product even though there's significantly higher usage?
Yeah, good question. We have a usage-based pricing model, which means that when a company is just getting started building on Twilio, it's actually very cost-effective because they pay very little during that prototyping and experimenting phase. But then as they roll out their solution and it gets used by more and more of their end users, the usage-based pricing model means that the company typically pays us more. And so during a period like this, that gives a lot of flexibility to our customers to expand their workloads during this period of time, which obviously represents good business for us. But they can also contract their workloads. And so that flexibility is paramount for companies who are dealing with crisis, who are building very quickly, and who are growing their products and changing and reconfiguring their businesses, if you will, on the fly to respond to not just this crisis, but even in normal times, continually reinventing how you engage with your customers and building in service of your customers and how to engage with them. And so that usage-based pricing model is very flexible for customers. They love it, and it's great for our business because it means that as companies use more of our services, our revenue grows.
So, Jeff, you mentioned some of the areas of growth we're seeing right now: online education, telemedicine, online grocery. How do you think about which ones might stick and become more permanent even after this pandemic?
Great question. I mean, I see a lot of the initiatives that are going on right now actually aren't out of the blue or invented. These are accelerations of digital roadmaps that many organizations have had in place that, because of the circumstances of COVID, needed to be accelerated. So I think about, for example, telemedicine. You know, a lot of hospitals have experimented with telemedicine. They've done a few remote visits here and there. But because of COVID, they immediately moved a substantial number, in some cases almost 100%, of their medical visits to virtual ones. And now you think about, well, when it's time to go back, to life as normal eventually when we get there, God willing. Do we really think that we're going to go back to wanting to drive across town to visit a doctor when we could just fire up a web browser and see the doctor in 30 minutes? Why would you take a day off work? Or I think about retailers when now we're doing curbside pickup of a lot of stuff. And you start to think about, why would I go back into the store when I could just click a few buttons and then drive by and have someone throw it in the car? These are great workflows. They're making our lives more convenient in many ways. And so I think the invention that's going on right now, this acceleration of the digital workflows that companies have been building for a long time, these trends are here to stay.
It's a pretty bullish forecast for your own business. The only question is then, why did you suspend guidance?
That's a good question. Obviously, we had a very strong Q1 and we guided to a strong Q2. But when we look at the macro picture, this is a macroeconomic environment unlike one that we've had probably in 100 years, give or take. And so in that kind of world, like peering into our crystal ball and giving guidance for extended periods of time just doesn't seem like the prudent thing to do. And so while we are cautiously optimistic about our business, we feel our products are incredibly relevant to the world as they've always been, and now even more so. We don't want to guess what the macroeconomic environment is going to bring in outer periods. We think the most prudent thing to do is to give the visibility we can see into the quarter ahead, and that's what we did.